11 April 2023, Tuesday. MAO with Cal once again. Guys, apology for the last few days as my body condition wasn't fantastic and I just got myself out from hospital. Hence, therefore, if my voice or my energy level is low, I sincerely apologize. But today, this video is so important because JPMorgan may potentially has a huge short position on gold. And you know gold has been going up from 2007 to 2008 to today, 2000. And if this price continue to go up, which a lot of experts are calling for it, then JPMorgan may get into some serious trouble. But again, I'd like to stress this, there's no confirmation of JPMorgan having this position. It's a question mark here itself. So if they do have, we have a big problem. All right, let's go. Now, disclaimer apply as usual, and thank you, Ames, for the kind sponsorship. Now, first of all, guys, 19th of April, next Wednesday, we will have our omakase Japanese lunch. And all you need to do is very simple. You just have to come online, okay, watch my video and leave a very good comment, all right? Comment that's related to this video, of course. So once you do that itself, right, guys, you will be joining me on the 19th of April at this Golden Mile Tower. All right, we're going for omakase lunch, okay? So make sure you do that like these guys. They are definitely going to be one of the lucky guys who will be going for the lucky draw. So as long as your comment have the thumbs up button and the love button from me, that means that your posting is actually accepted to be part of the lucky draw later this Saturday. All right. So of course, do it right now and you can get that lovely chance. Okay, so let's look at the US market for it. Okay, there's some PowerPoint issue right here. Just give me a short moment on this. I think I make a mistake here. Hold on a little bit. All right, just give me a moment. I'm not too sure what happened over there, but it's okay. Let's just bring it back here. Okay, done. Okay, so the thing is this, let's look at the US market now. Last night, US S&P 500 ended Monday slightly higher as investors anticipate the key inflation data. And of course, we all know that the Dow Jones up again by 100 points, while the NASDAQ pulled back 11 points, S&P up by 4 points, staying above 4,100 pretty closely. Now, the thing is this, we can see that basically the technology shares are quite flat, in fact, more to the downside. And interestingly, Tesla is still trading at 184, 185 level, and something that we mentioned before, anything above 220 is a sell on Tesla. So what's the reason for the market right now? Now, the market is struggle now with the tech companies. I told you guys, be careful of the ad techs because Apple fell by 1.6%, Google, Alphabet down by 1.8%. Now, reason is because of the potential interest rate hiking again in May, and I've been pretty confident that there will be a 25 basis point hike in May, and in fact the next one coming in there will be another 25 basis point. So because now the market is getting concerned right now with the so-called economic figures are getting weaker, as we can see that the PMI data is going down, the manufacturing numbers is going down, everything is going down at the moment, and there's more of a chance of a US recession, which is finally surfacing, and of course people now are getting worried. And to me, the labor market, as long as still has some strength, it's going to be very difficult for the Federal Reserve to do anything else. Even though the numbers is coming down, there's some weakening, but it's still not low enough for it. All right, we need real low numbers. Okay, so that's the one thing to watch out for. Now, one thing is that for me, I'm going to apologize on this. I never called on buy on Bitcoin previously because I think that Bitcoin might be coming down, and well, I slapped in the face. Now Bitcoin is at 330,000 and Ethereum's at 2,000. Now for Ethereum, I was more bullish. I said that if you don't buy, you buy Ethereum to buy Bitcoin. But of course, we all know that they go hand in hand. But nonetheless, it's all right. I'd like to share with you why. Now, because now more and more people feel that, right, this Bitcoin will become like the alternative what they call valuable assets because of the potential downside of the US dollar. Now, recently, US dollar have been going down. Hence, therefore, anything that's not US dollar, like gold, like Bitcoin, like Ethereum, or any cryptocurrency, people feel that it's better to buy them than not. But if you ask me, it's better to buy gold than to buy Bitcoin if you ask anytime. So let's look at the chart right now. I want to share this with you so they can learn this later on when I share more. Okay, so this is Bitcoin. Now, what is very simple here, guys, is in this green color means that the boys are buying according to my indicator. And when you see KCX from blue turn to blank like now, that means that it's a bullish call. And you can see once the color change from red to yellow, red to yellow, called CCRY, color change from red to yellow, it will be a buy, all right? And truth be told, back then, Bitcoin after that start to surge all the way until about 28,000. Then it went sideways for a while. Then, of course, there was some selling pressure, but because you can see the KCX is still blank, so it's kind of like sideways. But once you see the KSI and the KCX is green and blank, you can see that the movement of this Bitcoin continue. So recently, last few days, again, the KSI turned green and the KCX is blank. So straight away, you can see the Bitcoin accelerated, it's upside, and now it's 30,000. So it's very simple, right? You just have to see the KSI, see the KCX, and follow the colors, you are done. Simple as is, no need to think too much. Pretty cool, right? Okay, so that is the Bitcoin right now. So by right, from this chart, there's no reason to sell here because KSI and KCX are both still green and no blue bars, and the bar is trading yellow bar. So everything is kind of bullish right now. Okay. All right, so let's us remember what I said back then 3 months ago. Now, 3 months ago, when gold was basically escalating to 1,900, I was saying that gold will go to 2,000, but I said something very interesting. I said the word next round. Now, why do I say that? Because back then, gold was already surging, and I felt that the gold will hit the top first of 1,950 and then pull back. And once it pull back later on, it will go back up again, and this time around, it's going for 2,000. So that's the reason why I use the word gold will go above 2,000 next round. And that was 3 months ago. So if you look back at the tape right now, you can see what happened, guys. This was gold back then in 3 months ago. That was in around this area. So gold was trading about 1,850 back then. And I said that gold will go up soon. And when gold was somewhere around here, that was where a lot of people are saying that gold will go higher, like 2,000 and stuff. I say no, gold will likely be pulling back. That's the reason why I say gold will go up to 2,000 next round. And truth be told, wow, look at it, gold actually came off all the way down to 1,008. That means lower than the first time I called. And that was where at this junction here, about 1,850, I called for buying gold. I said that gold should be able to go up soon. And truth be told, gold started to move up. And then now 2,000 has been traded. And recently, it went even higher to 2,022 was the level I mentioned that gold will see some resistance. And truth be told, gold really came off. So everything is going alignment to what I say. Pretty cool, right? Okay, now with that understanding right now, let's look at gold itself. Now, first of all, central banks are continuing buying lots of gold. In fact, they just bought in 77 tons of gold recently, and that's a lot of it. That's compiled by World Gold Council. And of course, the Central Bank of Turkey was the biggest buyer in 2022. We all know that they are buying a lot of this for reserve. And of course, incredibly, we also have China, who could be the mysterious gold buyer who is stockpiling gold to minimize the exposure to the dollar. And of course, we have ECB also increasing it. Bank of Kazakhstan also increased. The only one that been selling in Uzbekistan with a 12-ton decrease. All right. So not too sure what's happening right now, but they do a lot of buying and selling among themselves. So we just leave it alone. But this is something important. The central banks are all buying gold. And of course, you can see that right now that article was in March, FYI. That's a March article. And now this is the April article, the latest one. And it showed again clearly that there is more buying from central bank. So central bank bought more gold, and this time now China market is clearly the biggest buyer. It's been quite open right now. And of course, according to the World Council, there's two reasons to buy gold. One is because of the crisis that may happen and the long-term store of value. So all these things tell us that you should be buying gold, right? Of course, when the central banks are buying, why are you selling? So let's look at the CME group, and this is a Meta depository statistics, and you can see very clearly that there's a lot of gold deposit being done, all right? But the thing is this, if you look carefully right now, this is from JPMorgan Chase. Okay, so what's happening right now? Take a look at this one number. I'll come back to this very, very shortly, because thing is this, central banks are buying gold at a record pace. And of course, you can see right now, the buying spree is there. So if everyone is buying gold, so why is JPMorgan selling gold then? Well, apparently it's all right. You can see right here, overall, the statistics shows that the buying and demand is really, really strong. And now from the gold, we are just only a couple of dollars away from the new all-time high, right? All these tells you that you should be on long side on gold. So the thing is this, right? Apparently, an article on 34th of January, seemingly someone actually says that, okay, this JP Morgan is holding a massive gold derivative short position that can be larger than the bank total assets. Wow, that's incredible. So the thing is, who is this guy who said that? This Dr. Stephen Lip. All right, he is one of the top fund managers in the world. And he says that, right, if gold to go up by 1,000, no, that will really, really hit this JP Morgan pretty badly. Right. So who is this guy again? Stephen Lip is a money manager and an investment advisor. For 45 years, he's been guiding investors via newsletters, books, and data from CNN, Fox News, NPR, and Bloomberg TV. Wow. Okay. So he does have his caliber. In fact, he's a very, very smart man himself. But he said this: if the true price of gold is ever discovered, corrupt banks like JPMorgan will be no more. Wow, what a very heavy statement. So the thing is this: some of the reader asked, have you ever wondered why gold never go above 2,000 and silver never go above 3 years? Because of the massive short position that keep the prices down accordingly. So the thing is that right now, right, how do they maintain it? Because the Federal Reserve is bankrolling it through primary dealers. Because the central bank knows that they cannot allow gold to shoot up. If the gold shoot up itself, it will create another unnecessary attention and inflation and worry. And that's the reason why seemingly someone is bankrolling somebody else to make sure that gold price stays below 2,000. But the thing is this: if one day the buyers are coming so strong and it break above 2,000, what will naturally happen? Now, this is Mr. Dr. Lip, his books is out and what he had written, and he was pretty outright. Back then, he already posted that he expect the technology to be doing well, and he also know that the crude oil will be one thing that will go to about $200. Okay, all this calls, and this is his books. I think you may have seen it in library or in anywhere. But the main thing is this guy itself is still very well sought after by a lot of this financial channels to ask him for advices and stuff like that. So this is guy, Dr. Lip. All right. But of course, JPMorgan, being the one that saved the US from two-time recession and depression, one in 1907 and one in 1929. So what do you think? I don't think that JPMorgan will be down and be expanded, but to me, they may get some hit around there as well. So of course, to make it sure that we are clear to it, let's take a look at JPMorgan, this consolidated financial highlights. You can see that the total loans are not too little. In fact, it's the assets 3 over trillion. Right, you can see that. Okay, but the thing is that their total loans is just 1 trillion outside. That's something interesting. But the one that really caught my attention is that the risk-weight assets 1.6, but the total exposure of the leverage-based capital matrix is about 4.3. Wow, that's a very big one. So the question is it because of the gold position? No one really can confirm this, but we are not. This is not the first time JPMorgan do market manipulation. In fact, back in 2020 recently, right, they actually had to pay $920 million for manipulating the precious metal. So this is something we know as spoofing. Spoofing means that you create an illusion of demand and lack of supply by doing the price manipulation. So if they can do that as well, I'm not even half surprised that they are now shorting the market. So all I can say is this, right? You have to make sure that you must understand there's a lot of people who's eyeing right now. And like this gold expert Ted Butler says that, right, a major development last month was a huge amount of gold issued by JPMorgan on the first 2 days of the COMEX April contract. So that means that for JPMorgan to issue so big itself, right, they must have something that they have previously, right? So this is why whereby this was it's very blatant according to some people that how JPMorgan played on the numbers. So anyway, given that there is a short position being established in the gold right now, then the current mark-to-market losses should be very, very big. Yeah. So think about this. So if if gold do go up to 3,000 or 4,000, oh my goodness, I cannot imagine how bad will the situation be. So of course, not only that JPMorgan is on the potentially wrong side of it, but Bank of America is actually on the positive side. Bank of America says that there's a very good chance that gold will hit 2,100, the same level as mine. In fact, I'm looking at 2,218 myself. And the thing is this, they say that overall, maybe you can even see 2,500. So not only the Bank of America, but look at it when I did the Google search, wow, even our own central bank is buying loads of gold recently. So if they are buying gold itself, why don't you buy some gold? I think you should buy some gold, right? So the thing is this, let's look at the fundamental of the gold right now. Let's take a look now. The one in candlestick is actually the gold chart. The one in blue, which is this one here itself, is actually the US dollar. So the thing is this, guys, take a look right here now. Back then in 2000, as of right now, right, the US dollar is coming down. That's why gold is going up. Can you see that? Now, previously, very interesting, when the gold was going up, the dollar was also going up. Then after that, the dollar continued to go higher, and that's where the gold finally got drift and then traded down. So recently, when the dollar had to come off, right, that was where the gold started to its rally. So the dollar itself, that doesn't have a direct relationship with the gold. Nope, because you can see that over this period of time, when the gold was going up, the dollar was also going up at that time. So it's not really directly related. Yeah. Okay. So you understand right now, if you go back to the past, you can see back then again, the Federal Reserve Fed fund rate, right, back then was at the lower end. But interestingly, when they were rising the Fed fund rate, right, you can see that obviously the dollar will actually be going up. All right, but the thing is this, the gold also went up during this period of time. It was only later on when the Federal Reserve had to pause interest rate back in year 2007. Well, that was where the dollar began to slide and gold started to accelerate. Okay, so now do you know why am I bringing this to you right now? Because we're talking about the same context right now. The thing is this right now, if you look at the chart, okay, there's some here, hold on. Okay, oops, I think there's some issue here. Okay, never mind. I just move. I think there's some duplicate chart here. Okay, let me just move back the tape a little bit. Okay. Oops, sorry. Now, the thing is this right now, we all know that this Federal Reserve is still pumping up the interest rate high, right? And that's why the so-called the dollar is coming down, because now there are people saying that there could be a chance that there will be a Fed pause, and when there's a Fed pause itself, the dollar will likely be trading lower, and that's why the gold is going up. So the thing is this right now, if we were to ask ourselves this, if the US Federal Reserve is continuing going to hike rates, okay, and the dollar, because of the weakness now, the dollar continue to fall, that will be a big problem. And the worst thing is if once the Federal Reserve decide to cut interest rate, oh my God, you cannot imagine how bad it will be for the US dollar. And of course, when that all happens, gold will really shoot through the roof. So you look at my gold chart, you can see very clearly when you see KSI green and KCX is none, you see red turns to yellow, it'll be a buy. Got it? So same thing again right here where KSI is green and there's no KCX at the bottom, CCRY, color change from red to yellow, it will be a buy. And you repeat that again, this will be the same context right here. So recently itself, when the KSI was green and KCX was blank, by right, color change from red to yellow will be a buy, and gold just shot up all the way. So the thing is this right now, gold is kind of resisted right now at around this 2022 level. I suspect that gold will pull back a little bit next few days. Then after that, watch out for my indicator. If my indicator stays green and KCX is blank, most likely the color turns from red to yellow, it'll be a buy again. Now, recently, a lot of people have been buying gold together with us, and they all profited because they just follow the simple indicator up. Okay, all right, pretty cool. All right, with that, it's all right. That ends my today's video. But remember this, if gold price really hit 2218, I'm pretty sure those who short naked will have to cover back their position sooner or later. And that will bring gold even higher. This is Cal signing off. Have a great day. Bye-bye.